What is DeFi? Decentralized finance, often known as DeFi, is a concept that is closely linked to Bitcoin, crypto, BTC, and other cryptocurrencies, but it is not precisely the same. Decentralized financial systems, abbreviated as DeFi, are made possible by the technology of blockchain distributed ledgers. DeFi is specifically connected to the blockchain of Ethereum, crypto, ETH, and all of the cryptocurrencies based on it. The creation of decentralized money through DeFi technology removes the need for centralized banks that the government controls to issue and regulate currency. However, DeFi technology can also deliver other blockchain-based solutions for the financial services industry. Fintech firms employ DeFi technology to facilitate various services, including the provision of savings accounts and loans, the facilitation of trading in stocks, and the provision of insurance. Users of DeFi technology can also create platforms that solve the specific problems of their community. For example, a community might issue a token-based platform where members can share the cost of purchasing and maintaining local infrastructures such as roads or schools. This is an excellent way for communities to raise capital to finance projects and facilities that benefit them. The technology behind DeFi is powerful and can be employed to solve various problems in the financial industry. While DeFi does not specifically involve the creation of digital currencies, it does make possible the creation of decentralized finance systems thanks to blockchain technology. Because of this, it is a part of an emerging field in finance that is more closely related to cryptocurrency and blockchain than traditional banking. How DeFi works. DeFi is powered by the latest technology made possible by blockchain as a decentralized system. Decentralized finance will be powered by distributed ledgers, which are public and transparent databases based on smart contracts. All digital assets have ownership registered in the blockchain of their respective platforms. Financial institutions can then transfer assets from one platform to another with the help of smart contracts, which enable automated transfers between parties with a balance in each other's system. Rather than relying on centralized financial institutions like banks, exchanges, and insurance firms, DeFi is a technological option that can be used instead. By utilizing smart contracts on blockchains such as Ethereum, DeFi systems can successfully reach distributed consensus. Developers write smart contracts to carry out predetermined activities only when particular circumstances are satisfied. A straightforward illustration of how to use a smart contract would be to construct it so that it states you would hand over $500 to another individual if the Cardinals win the World Series this year. Anyone on the blockchain's network can view the code and read it once the smart contract has been published to the blockchain, but no one can make any changes to it. Decentralized applications, sometimes called dApps, are typically governed by smart contracts. These applications are not owned or operated by a single company or individual. Although Ethereum was the first platform to design smart contracts, other blockchain platforms also use them. Using DeFi, any two parties can conduct a transaction privately and securely without requiring a third party or a centralized authority to be involved. Because of this, a far larger number of consumers can now gain access to financial services at prices that are more affordable or receive interest rates that are superior to those provided by conventional financial institutions. How is decentralization achieved? Digital tokens are used to power the DeFi platform by representing a financial instrument or a set of financial instruments. Tokens can be used to represent funds, stocks, bonds, and real estate. These digital tokens can then be traded freely on cryptocurrency exchanges. However, these tokens are not created by banks or financial institutions, but rather by the community that uses the platform for which they are intended and on which they run their operations. DeFi applications. Prediction markets. Prediction markets are usually used to predict future events. This is a tool that many professional analysts use to make forecasts about stocks, currencies, commodities, and bonds. Prediction markets can also be used for sports betting or event gambling. The blockchain allows these prediction markets to be deployed on an independent DeFi platform, eliminating the need for centralized authorities to operate them. Borrowing and lending. Lending and borrowing are essential to a functioning society. Lenders, such as banks, are vital in allowing people to access credit, while borrowers can get money when they need it the most. DeFi can provide better alternatives to traditional financial institutions. Insurance. Insurance is a field that often attracts the attention of DeFi enthusiasts. Insurance companies are involved in complex business, but it is not uncommon for them to incur insolvency. The success of DeFi technology depends entirely on the fact that it provides a better alternative to traditional insurance firms. Provenance. Provenance is the system that tracks resources throughout their life cycle. It allows buyers and sellers to ensure that the goods they purchase are exactly what they were advertised as and therefore helps protect consumers from fraud. Decentralized exchanges. DeFi applications realized in the form of decentralized exchanges will allow for the trading of digital assets and cryptocurrencies in a trustless manner. These applications can reduce the number of intermediaries involved in transactions. They provide users with a peer-to-peer platform that utilizes smart contracts. Why use DeFi? In a DeFi environment, users can trade cryptocurrencies like stocks and other financial instruments. Cryptocurrencies are first exchanged into stable assets linked with real-world assets such as commodities or fiat currencies. Stable assets are backed by physical resources and be more stable than cryptocurrencies, which can suffer from extreme price fluctuations. DeFi is seen as a way for blockchain startups to attract the attention of investors. Accessibility. DeFi is also considered a way for blockchain startups to attract younger, tech-savvy users who are more interested in the technology than a startup's investment potential. Distributed governance. DeFi allows users to interact instantaneously with each other and perform transactions through decentralized applications. The user experience will be more intuitive and straightforward compared to the way that traditional financial institutions work. Investment opportunities. Cryptocurrencies are still considered an internally unregulated asset class. There is no centralized authority that decides how cryptocurrencies should be used. Because of this, people can experiment with the technology and use it to solve the problems plaguing the financial system. Increased transparency. DeFi solutions will be able to create a system that is more transparent than the traditional banking system. It will also allow institutions to improve their trustworthiness and their organization's reputation. Decreased transaction costs. The blockchain is used to close the gap between fiat currencies and cryptocurrencies by allowing users to transact in them at no cost. DeFi solutions are expected to reduce the cost of transacting with cryptocurrencies through intermediaries. Functional autonomy. DeFi solutions rely on the community to grow. This means that the success of a particular application will depend entirely on its community and its ability to find ways to ensure its sustainability. DeFi solutions are still in their infancy, but they have the potential to transform how financial transactions occur in the future completely. Many people see DeFi as a way for blockchain-based startups to quickly improve their reputation and attract investment to develop their platforms further. Low fees and high interest rates. Due to their decentralized nature, the DeFi marketplace can offer low-cost transactions and high interest rates. These attributes are attractive for people who need to invest or borrow money for investments regularly. The DeFi revolution has started. The future of financial institutions is approaching fast and will significantly impact how we use finance in our daily lives. In conclusion, blockchain technology is increasingly gaining popularity in every sector of our society. Conclusion. Financing blockchain startups is more complicated than traditional tendering loans for startups. While, for the most part, it is similar, there are a few wrinkles that you need to consider. Firstly, conventional banks do not want to get involved in crypto-related businesses. However, there are some exceptions, which include JP Morgan and Santander. This means that P2P lending platforms will come up with their platforms specifically designed to cater to companies based in the fintech and blockchain industries.